Today, we are continuing our live analysis of EUR JPY Strategy Number One. This is day 3, and the chart is set to the 10-minute time frame. The purpose of this session is not only to look for profit, but also to see how the strategy performs when the market becomes difficult and unpredictable. The trading window begins at 12 a.m. and continues until 7 p.m. London time. At exactly midnight, we mark the current market price as our reference point. From this level, we place 2 pending orders, a buy order 15 pips above the reference and a sell order 15 pips below it. Both orders use a 30 pip stop loss and a 60 pip take profit target. This gives us a 2-to-1 reward to risk structure. We do not try to guess the direction of the market. We simply prepare for movement on either side and allow the price to activate one of our orders. Once one pending order is activated, the opposite order must be removed immediately. If the buy order activates, the sell order is canceled. If the sell order activates, the buy order is canceled. This keeps the setup controlled and prevents us from holding 2 conflicting positions. When an active trade reaches 50 pips of profit, the stop loss is moved to the entry price. At that stage, the trade is protected at break even, while still having the opportunity to reach the full 60 pip target. Now we begin day 3 by drawing the vertical line at midnight and marking the first reference point. The 2 pending orders are positioned correctly, and the risk and target areas are clearly visible on the chart. During the early part of the session, the price starts moving upwards. The buy order above the reference point is activated, so the sell order below the reference is removed. For a short period, the market holds above the entry, but the bullish movement is not strong enough to continue. The price begins to lose momentum and then turns sharply downwards. Because the trade does not reach the 50 pip break-even level, the original stop loss remains in place. The reversal continues, and the first trade reaches the 30 pip stop loss. Trade number 1 therefore closes with a loss of 30 pips. A losing trade is always disappointing, but it is part of the strategy. The important point is that the loss was controlled. We did not increase the stop loss, we did not chase the market, and we did not open another position immediately. According to the rules, after a losing trade, we wait until the next full hour before creating a new reference point. The first trade finishes shortly after 2 a.m., so we wait until 3 a.m. before preparing the next setup. At 3 a.m., we mark the new reference price and place another buy order 15 pips above and another sell order 15 pips below. Once again, both orders have a 30 pip stop loss and a 60 pip take profit target. For several hours, the market moves sideways with no clear direction. Price rises and falls inside the setup, but we remain patient and wait for one of the entry levels to be reached. Later in the morning, the price moves higher and activates the buy order. The sell order is removed immediately. The market briefly continues upwards, but again, the bullish momentum begins to weaken. A strong bearish candle then appears, and the price drops quickly through the entry level. The movement continues lower until the second trade also reaches the 30 pip stop loss. Trade number 2 closes with another loss of 30 pips. At this stage, the running result for the day is minus 60 pips. This is where discipline becomes extremely important. After 2 consecutive losses, it can be tempting to become emotional, increase the position size, or enter another trade without waiting. However, none of those actions are part of the strategy. We follow the same rule again and wait until the next full hour. The second loss is completed shortly before 8 a.m., so at 8 a.m. we establish a new reference point and prepare the third setup of the day. The buy order is placed 15 pips above the new reference, and the sell order is placed 15 pips below. The stop loss remains 30 pips, and the target remains 60 pips. Nothing is changed simply because the previous 2 trades were unsuccessful. Initially, the price moves lower and comes close to the sell side, but the short order is not activated. The market then begins to recover and gradually moves back above the reference point. As the price continues rising, the buy order is activated. The sell order is removed, leaving us with 1 active long position. This third trade develops very differently from the first 2. Instead of a sudden and powerful move, the market climbs slowly. There are several pauses and small pullbacks, but the general direction remains upward. The trade moves into profit, although it does not reach the 50 pip level required to move the stop loss to break even. For that reason, we continue to manage the position according to the original rules and allow the market enough space to develop. Throughout the afternoon, EUR JPY remains above the entry price. The upward movement is steady but limited, and the full 60 pip take profit target is not reached before the end of the session. As we approach 7 p.m. London time, the third trade is showing approximately 20 pips of profit. The trading window has now reached its closing point, so the position is closed and the available profit is secured. Trade number 3 therefore finishes with a profit of approximately 20 pips. We can now review the complete result for day 3. The first trade lost 30 pips. The second trade also lost 30 pips. The third trade recovered 20 pips before the trading window closed. The net result for the day is therefore minus 40 pips. This was not a profitable day, but it was still an important and valuable trading session. The strategy was followed correctly from beginning to end. Every reference point was marked at the correct time. The pending orders were placed at the correct distances, the opposite order was removed after activation, and every position was managed using the planned stop loss and take profit levels. Most importantly, we did not change the strategy after the losses. We did not increase the risk, we did not take revenge trades, and we did not ignore the trading window rules. A professional trading approach is not measured only by winning days. It is also measured by how well losses are controlled and how consistently the trader follows the plan during difficult market conditions. Day 3 finishes with 2 controlled losses and 1 profitable trade. The final result is minus 40 pips, but the discipline of the process remains intact. This is why every strategy must be tested over many trading days. One winning day does not prove that a strategy is perfect, and one losing day does not prove that it has failed. The real performance can only be understood after collecting a meaningful amount of data. Thank you for watching today's analysis of EUR JPY Strategy Number One. Continue to follow the complete journey as we test the same rules across different market conditions. Record every result and focus on consistency, patience, and disciplined risk management. Download